Hello, everyone. Hello, sir.
Hey,
So, welcome everyone to a brand new episode of Decoding the Markets, your go to session to understand what's really happening in the market and where they could be headed next. So, today's session, we are joined by our market analyst and strategist with decades of experience. He's here to help us break down the chaos and identify the three key moves that matter the most. So, welcome, Rohit, sir, once again
yep.
to the decoding market. And so, whether you are looking to sharpen your trading game, gain macro perspectives, or simply decode the current market mood, you are at the right place. Stay tuned and grab your notepads and don't forget to drop your questions. At the end of the session, we will take three questions and answer them. So, let's start, sir.
Let's go.
So, right. So, let's talk about today's market. How was it?
Terrifying to say the least because the last 5 days market is doing nothing. There's one odd stock moving out of 100 and everything else is dull, which is not exactly very interesting. Pretty painful to sit through this market, especially when you look across all the way north. Europe is going up 1% every day. DAX is close to, or probably already at, today it's already at an all-time high. So it looks like you should be invested in Europe instead of India for the time being. Unfortunate, but our market is just lying flat. For some unknown reason, it's not wanting to move.
So, after being a so much experienced trader and investor, having so much experience, you are saying a sentence which claims that the market is moving nowhere, whereas many traders are feeling FOMO, actually FOMO, because they are very new to this market and due to the missed opportunities, like how should you like advise them mentally and technically to deal with such situations? Like chasing versus waiting, that is thing. Like the scenario which goes in mind. Yeah, I have heavily invested in the market. Should I chase or should I wait? But the market is going nowhere. See, it's a very you just told that this is a very painful situation. If a trader like you with such an experience can say a sentence ki it's a painful situation, that means the market is like terrible. It's very terrible.
No, but so let's add some perspective to it. When I'm saying it's painful, I'm talking about like a very short term, like 1 week, 8 days kind of time frame. And I believe that the FOMO that you're talking about is really got to do with investors with a 6 month, 12 month, or more time horizon, if I'm not wrong. So you can
Hmm,
correct me
hmm.
there. So that's these are completely two different time horizons. So the frustration short term traders is week upon week. I mean, if market spends 1 week without going up or down, it is frustrating. When I started out in the market, markets would go up or down every day. So there was no such thing as a flat market, very rare. It was either down 200 points or up 200 points. So there was always a trend, you know. There's no such thing as, oh, today's. I mean, you can get a doji, but you get a doji once. You don't like get 6 dojis in a row. So this almost feels like, even though Jane Street is gone, and unfortunately I have to take that name again, there are many other Janes and Tarzans in the market working behind the scenes to keep volatility down. That is what it would look like. You need to, figure out. There are probably a lot of manipulation in the stock options part of the market also, which should be really looked upon more deeply. Why you're getting so much rotation and control shouldn't be there. Things should just keep moving every day. It There's no reason for anything to be so flat for very long in a market. There's either selling or buying. So when it becomes so flat, I doubt the integrity of such a market. For some time it can happen, but it cannot happen permanently.
That's
So
true.
once there was a very non-volatile market for a year in 2006, but that was 1 year in 10. This kind of pattern we are observing time and again, many times every year, once in a while. Uh, Last year was still, I mean, there was still small phases. This time, I'm continuously seeing a repeat and a repeat. Now, since May, we are seeing this. Let's see. So,
So, mm,
but for the investors, what you're saying, see, when the market is in an uptrend, people will
mm,
feel FOMO for months and months. Now, let's say my view is the market goes up for the next 1 year or 1.5 year. Okay, there will be corrections. So, what are you going to do? Are you going to do nothing? So there you need a judgment call on where are you within that 18-month cycle. If you are in the early stages, uh, you need to let go of the FOMO and participate, because it's not FOMO actually, it's normal. You are missing out. The wrong decision on FOMO is made at the end of a trend, not at the start. Now, if you feel that, oh, I didn't buy at 21,000, now it's too late. No, you're going to 26, then you go to 27, then you go to 28. So you'll keep feeling more and more of that pain if you don't participate in the early stage. And yeah, this is early stage, so that's my main point. We're just getting started.
so there is no point of feeling FOMO. People
No,
can.
no, not everything has moved. I mean, just sometime back last week, we were discussing that, you know, many stocks have not moved up. People feel that market is not up even though it is up. So that is the truth. A lot of participation is still left to start happening. And because not everything has improved, not earnings have not fully revived, all those reasons are true. But that doesn't mean the market will come down. It's just that stocks that are not yet turned around are still there down. So there's still opportunities.
So, talking about the opportunities and trends, there is a very famous indicator, the Rohit Pavitra indicator, that is the RMI. So, could you just tell us, like, how did you come up with the idea of RMI?
So it really goes back to the 1990s. I'm looking for something that can give me signals to trade. And when we use MACD, it's always late. The stock is already moved for 6 days, 7 days before the MACD gives a buy signal. So you needed something faster. So that was the first thing. Classical indicators like the ROC are very, very jagged. Okay, so what we do consider it, but not in the original form. Then I went on looking at various oscillators, including some of the volatility oscillators. So there would be a volatility oscillator. There's a Chaikan's volatility oscillator, and there's various such funny ones that used to be there in the old meta stock. Probably they're still there, and I'd keep plotting them and seeing what happens. But what happens with volatility indicators is, even if price falls, the volatility goes up. Even if price goes up, volatility goes up. So it is not directional. It just tells you that a move has started. In which direction you still have to figure out. So that did not completely answer my question. So I tried to combine some indicators and put something together which would give me both the direction, and it would not ignore the structure, and also further use some smoothing, as I learned about smoothing of averages and things like that. So clean up the noise, and that's how I ended up creating this indicator in its original form. And then later I made some changes to it to further smoothen it. uh, the early version was a little less smooth. In fact, I also ended up creating two separate indicators, one for uptrend, one for downtrend. Now, mostly we just talk of one because it's easier for everybody. So it's like the
Hmm.
mid version, not the one which is skewed upwards and skewed downwards, uh, which is good enough. I found that, having those versions is not necessary. I just thought of them in the early days and used them. But the advantage turned out to be that, one, it was giving me early signals. Two, I was able to build a theory around it, which involves capturing momentum cycles that start from near zero and then come back to zero, and build on and create patience in the system. Basically, that okay, if you missed out, like what you were talking about, FOMO, then you simply wait for a new cycle and participate in the new cycle of the next momentum cycle. That doesn't mean prices will come back down, but at least it gives you a sense of confidence that yeah, whatever correction or consolidation had to take place has already taken place, and now you don't need to wait for more downside. You can start buying over here. So that is what the momentum cycle allowed me to become confident of. And so patience to wait for the next trade. Even after FOMO, you wait for the right time using RMI to make the next entry.
Indeed, it's a very, very good indicator, and people are using it, and they are really loving it. So
And
it's been
it
a
works
while.
against time frames, whether it's
Yes,
daily, hourly, weekly, any intraday to long term, quarterly, all time frames it is applicable, and all securities.
it's a very diversified thing that's very, very good indeed. So, talking of the sentiment of the markets, what role does sentiment analysis play in your current outlook?
It plays a very significant role. See, in combination with RMI, as we talk about the momentum cycle, and then everybody knows me for Elliott wave analysis, which is the structure of the markets. The structure is essentially based on mass psychology, and that is best reflected in some kind of sentiment indicators. So, when we are actually looking at even this type of a market, which appears very, very dull, sentiment indicators give you perspective across different time frames as to what is happening short term, medium term, long term. Now, I think Jay spent quite some time today today morning in a session explaining some of that, and so let me just throw light on some of it here as well, as to what different sentiment indicators are showing in different time frames. So when we are looking at something like swing, okay, now this is a short term indicator. So here, when we actually start seeing the swing go from, see, even here when it goes to oversold, even though the market has not fallen, we get a sense that okay, it may be bottoming out. Now here, from this peak, it has been falling, right? It has been falling, resulting in a consolidation. Now, somewhere you have to come to the end of the consolidation, but typically the consolidation ends only after this swing comes back to like into the 30s, which it is now. Sometimes it will even drop to the 20s, like 28, 26, 24. I don't know if that one more dip is left. We'll come to know tomorrow. It's not a necessary requirement, but say 80% of the time that is what has happened. But some of the other occasions, it has gone up from here as well. So this gives us a short-term sense that okay, here it was at a peak, but now it is not in the very, very near term. But then some people may argue that okay, long term we are very bearish, etc. And then we go to other indicators. For example, the participant positioning, where domestic institutions is what I'm really looking at, because they have a slightly more longer term outlook, and their positions don't change as fast as FI's positions change. So when we look at this and we see this consistently, first of all, they were consistently long over here throughout this time period, from year to year to year. They did not cut back all through the India Park troubles. After that, they did reduce their positions, but moment you had the Iran-Israel thing start, they've added positions right back, and even now holding on throughout this. This is the most prolonged period of long positioning that I remember. Okay, this long up here, not happened yet. You just go back and see the short periods here. It just goes up here, and that was the bottom. Here it's been really long. Even after the market's gone up, they're holding on and not changing their stance. Some of it has to do with sentiment, because it shows that on the other side, people are so negative and so scared of, as you said, FOMO and so on, which is true. But these guys are holding on and supporting the market. They're not letting go, and that gives me confidence. Okay, on the other side, that no, this is not a market that's going to fall apart. They have your back. So that is how different sentiment tools are helping in this scenario. Now, right now, I don't have others giving a clear-cut picture, but here is one which has some picture. And this is the what we call as the open interest-based put-call ratio. It bottomed here somewhere around this point, and from there it's been slowly moving up, moving up. At one point here, I thought maybe it will go down again, but it didn't. It again turned up. So it's sort of in an uptrend. So this is actually a positive indicator because typically it goes up with the market. So when the market is going up, the YPCR also goes up. Usually it is overbought around this level over the last 1.5 year. Prior to that, we've seen higher readings like here. I don't know whether it goes up there this time or not, but definitely we are still here. So there is this case for it to actually move up from current levels to above the red line before we even get some kind of a meaningful peak. So this also tells us that there could be further upside from here. It's just that what I started out in the beginning, that was my frustration of watching a dead screen every day, and patience of getting paid on your bullish view. But what I've just shown you is the importance of sentiment and telling you that uh, your view doesn't have to change. Sentiment helps you in keeping you on the right side, and also in timing. When pullbacks happen, it gets oversold. It helps you to time in a fresh entry in terms of new trades if you want to take on when they get oversold. So if the swing really drops to a 20 kind of thing, that gives you a level to add. Last week when it dropped to around 40 45, that's where the market actually bottomed. When it hit the low on 4th of July, we haven't gone below that yet, which was at 25,331. That day the reading had really come down. Then it went back up to around 60 something, and now again it has come down to a 30. But now it's come down to a 30 at a higher level in the market. So it just struck me while talking to you that might even be a positive divergence. So you have a higher price in Nifty and you have a lower swing. It's a bullish divergence, a reverse divergence as we call it.
Well, sir, I wanted to throw a light on one more aspect, that the Indian tariff deals that we were talking about on the last live. So,
Yeah.
what's your view on that?
The tariff stuff is being tricky. So I thought at that time that he'll just push dates ahead and continue to negotiate, because in the end he wants things to happen.
Right.
To some extent, he has done that. But what is also has some slight negative surprises, like what he said on copper yesterday, that there'll be a 50% flat tax on copper. Now, in flat taxes, the problem is it doesn't affect us because we are net exporters, and the export price of one country to the next doesn't change. So we don't get worried on the competitive part of the issue. The issue is that if you increase rates of import inside the US, can it hurt domestic US consumption, demand, and growth? Especially when you do it across the board. I mean, that's what so there was something known as the tariffs, smooth Hawley tariffs, which were done in the 1930s, and some people say that has instigated the next leg of the downtrend of the Great Depression. So essentially, they occurred in an environment where things were, probably slowing, but not slowed so much. He didn't think it was an issue. He thought he needs to raise money, and it backfired by slowing the economy down. That is the fear, basically. So far, the US economy has not slowed down. So we don't feel that. So far, it looks like by pushing the deadline to 1st of August, what he's doing is simply telling places like Japan, Thailand, and others that please come to the negotiating table and finish this. It's not like, this is it. It's like he's open to them negotiating, but he's saying not after 1st August. So basically, he's trying to put pressure ki come talk, finish. Like Europe spoke and they're out, right? Europe is making an all-time high now, so nothing happened. I'm hoping something similar is there for India as well. That we can get past this, because if you agree to something, sign up on something and move ahead, then you won't have anything negative coming from there. But there's still some rhetoric going on around the BRICS, but it's not very clear what he will do, because one side he says, I think the BRICS have already broken up, which means he thinks that the BRICS doesn't exist. He doesn't want to do anything. At the same time, he's keeping the threat alive that, if these guys appear to take any coordinated action that harms the dollar, then he would probably take it seriously. I think that's where. So these are all, he's made his points very clear, where he wants you to not do something and where he wants you to do something. But I don't think the BRIC has ended. So, but they may, because they'll still be there. And yesterday only they were, the BRIC nations were, protesting against something related to terrorism and all that. So it's all going on. But yeah, that's a different issue. So yeah, this time around, India not affected. Hope is still very, very alive that India will have a deal of some kind coming out. I hope sooner than later, because the more time getting wasted, and in probably this flat and dull market is because of that. Because on Monday, people thought, oh, by night some letter will come and India's name will be there. On Tuesday, there was a money control article saying, "आज रात 10 बजे तक, अभी तक कुछ आया नहीं है." So the clock is ticking. Once you get that announcement and it's out of the way, the markets become more comfortable that there is no uncertain news around the corner. So that could be one very simple reason why the market has not taken off. It's not breaking down because they expect a positive outcome, but it's not taking off because who the heck knows? This is Donald Trump.
It can go up, it can go down, it can go anywhere.
Uh,
That's where the thing is.
so the expectation is that it will go up, but people are not willing to go all out on that expectation till they actually get the news.
Because there have been instances where the people hopes have been very high and they have been seen something totally opposite to that.
Yeah.
And hopes are made to shatter sometimes. So that's it for today's conversation. So, sir, let's move with the comments. It was a good session today. Indeed. So, the first question I'm taking from Mahesh. It's from the copper itself.
Yeah, his concern is why doesn't it reflect in MCX copper? Yeah, because this was tariff based. Maybe the adjustment is to the extent of impact, but of course, then that should mean a 50% move in copper price, right? So I think we'll have to go a little more into granular detail of the story. See, MCX copper also reflects the potential that Indian copper prices export at the same rate. So sometimes there are speculative bursts which are not normal. This ends up looking like one of those. He's right, because usually if there's a price movement in COMEX, it does reflect on MCX. Someone came out on Twitter saying, no, it reflects more that MCX follows the LME. But I don't think so. I mean, if you've traded copper all night, you watch the the COMEX price in the night and it moves in line. But that's not what happened on this instance. A little hard to explain. I think it has to do with how the tariffs impact the copper price. And that really requires some insight, and I think only that much adjustment has happened in the copper futures right now. And that is why it doesn't reflect here, because the Indian price, when it reaches the US shores only, then the tax applies. That's probably why you're not seeing, or you're seeing a differential movement between COMEX copper and LME copper, which then is reflecting in MCX copper.
So, moving to the next question, sir. It's
like I just checked, LME copper prices also are down for the last few days. Such a long period of low VIX before? Yeah, they have been. I mean, the VIX remained flattish during the entire 2004, 2008 bull market. It was for a long time stuck at around 16, 17, 18. So you didn't have VIX then, but we used to manually calculate it. You could get the number of the NSE terminal. So I used to keep it on an Excel sheet manually. It remained the same throughout the bull market. Very interesting it was. There wasn't so much movement in the VIX for those 5, 6, 7 years. It just went up from the base period. I mean, when the bull market had not started and the market was stuck in a range in 2001, 2002, the VIX was around 10, 11, 9, that range. Then it broke out and went to 16, 18. I thought it was too much, but wrongly so, because through the entire bull market, it stayed there. Because, of course, you now had speed on the way up. So it just stayed there. So there's nothing unusual about a high VIX. A very high VIX, yes. So very high is what? It's like above 10. So there are these ranges, sub 12, then 12 to 18, and then or 19, and then above 19, all the way to 30, 35. And then above that, all the way to 80. So in different phases of a bull bear market, you see it go into these different ranges. We are not in a range where I would say it's problematic. I mean, current reading today is what? It's 11.94, and somebody says it's sideways. But frankly, as you are speaking, I opened the VIX chart. It has been falling for the last 2 months here. In May, the VIX was at 21.63, and now it is 11.9. How is it sideways? So it's sideways only if you go to a 1-year chart and then say maybe it has gone up and down somewhere. So the 1-year chart, you will see a range where broadly the top end is around 18, 19 and the bottom end is around 11. Okay, that's normal.
So moving to the last question for today's session.
Sentiment indicator and diffusion indicator, can you bring in all sectors? We have already done that. It will go live in the next few days.
So this was the last comment for today.
Yeah, we will also bring in a lot of the other indices that the micro sectors later on, which are there in NSE, the subgroups. And you'll have many subgroups which are not in the key indices. Both things we'll do, but the other indices we have already included. It's just not live. Next few days it should go live.
So thank you everyone for joining us. We will meet on Friday, same time. So trade smart and use strike for trading smarter. You guys will have an edge. So thank you everyone. Thank you, sir.
Thank you everyone.